Listen, this is John Casman, and you are here with the Multifamily Mastery Show. And I'm excited to bring today's guest, Ben Reinberg. Ben, how are you today?
Great, John. What a privilege to be here and to be able to chat with you. I love talking about commercial real estate. I love talking about multifamily. We just opened a brand new multifamily division at my company. So really excited. Look forward to adding a lot of value to your audience. I know it's a little bit of a younger or getting started type crowd. And I remember being there 32 years ago. So I can't wait to have a great conversation with you.
Yeah, man. I mean, that's the beauty of this show, right? We've got listeners who are starting out. We have some who are got a little bit of seasoning to them. And we also have some veterans who've been doing this for a long time. So your experience, your background, 32 years in the space, you're going to add a lot of value. For those who are not familiar, Ben, you're the founder and CEO of Alliance CGC. Can you tell us a little bit more about your company and kind of what you focus on today?
Well, I started from shoe leather. You know, I didn't come from money, John. I'm from Chicago, as you know, born and raised. And, you know, when I was a young kid, there was no internet like there is now. And so I didn't have the advantage of some of your listeners that are getting started, which I think has a big advantage. And it's the reason why we own all in 30 states around the country now. And so when I started my career, I'm an office and industrial expert. I build millions of square feet. I did my first syndication when I was in my early 20s. I bought industrial, syndicated it, raised a few $1,000,000, flipped it for a 3X. There's more to the story. Wasn't a perfect ride when I bought that first deal. I'm happy to share that with your audience. But long story short, after office and the internet started kicking in, we realized, we sat in our investors and said, you know, general office, I thought I was going to own skyscrapers. That was kind of my journey. I was like, I'm going to be the next Sam Zell. I'm going to buy skyscrapers. I'm going to own large office buildings in central business district areas like Chicago and New York and Los Angeles and Dallas and Miami and Cincinnati and you name it. And then I took a pivot in my career and said, well, you know, general office is not really doing well. People don't need as much space. So I got into 23 years ago, my company, we got into medical office and we became a leader in that space. And so we own office, industrial, and retail. And now we just opened a multifamily division and we're going to be doing our first round of assets shortly. I'm really excited about multifamily. I'm very bullish on it. And so for everyone out there listening, stick with it. I know, you know, commercial real estate is not the most favorable term right now with lenders, but I can guarantee you I've been through cycles. I've seen what's going on, the lack of liquidity. Rates are probably going to drop in September. It's going to open up the door for more lenders to get involved. And it's exciting time, ladies and gents out there. I'm telling you, it is very exciting times. I've seen these cycles. It's going to be great buying opportunities. There's trillions of dollars of debt coming due shortly. And you're going to have an opportunity, whether you buy a 5-unit building to a 250-unit multifamily opportunity. There are going to be opportunities for you to capture. Now's the time where you double down. Now's the time you put that extra effort in, the couple hours of work, the Saturdays, the Sundays, if you need to. This is what I do. This is what I've done my whole career, John. And I do it because you have to capture and really grab the opportunities when they're in front of you. So at Alliance CGC, that's what we are. We're office, industrial, retail experts along with multifamily. We have a hard money lending division. I'm a commercial real estate expert. That's my lane. That's what I do. And it's why I decided back in the spring, early summer, to put out my first book, Hard Assets and Hard Money for Hard Times. And I wrote it for you, everyone listening. I didn't write it for me. I didn't need to spend time writing a book. But the reason why I bring up this book is because if you're getting started to build a hard asset empire, that's what I'm teaching. I'm showing you how hard assets can produce wealth. When I was a kid, I would sit on a curb and I'd see all these Mercedes going by and the different cars. And I'd see people, you know, how they were living. And I was from Chicago. And I saw the Crowns and the Pritzkers and the Zells and all these wealthy billionaire families. And I said, how did they make it happen? They made it happen through hard assets. So everyone out there, if you're looking to build wealth and you're buying multifamily, you're doing the right thing. You're buying hard assets. It's the ability to produce wealth. And if you want to pick up a copy of my book, it's very cheap. You can buy it on Amazon or Barnes & Noble, or you go to benreinberg.com, my website. I wrote it because I wanted you to have the inspiration of how I built a hard asset empire, how my colleagues have built it. And I wrote it for the Ben Reinberg, who was 32 years ago, who was getting started, to the billionaire. And the reason why is you'll be able to grab it off the bookshelf, John, at any point in time and see how you can change, amend, build, compound, retain, defend your hard asset empire. I physically teach you how to build it and what to consider. And we even go as far as data and security. And at the end of the book, I talk about mindset, because I talk about with people the reality of it's not for the faint of heart. Okay, you're going to go, you're going to develop resources, you're going to find an attorney, you're going to be like, the attorney doesn't follow up with me. I got to pivot and find a new commercial real estate attorney. Accountants, yeah, my accountants aren't responsive. Maybe I got to find someone else. So you're constantly pivoting, and it will impact your mind. And I also talk about show me your friends, I'll show you your future. Who do you surround yourself with? Be very careful who you bring in your mind space as well. I talk about these things because it's a holistic approach. And what I've determined, John, is that most people, the reason why I wrote the book is for decades, people have said, how do I do this? How do I invest in commercial real estate? How do I invest in Alliance, what you're doing? How do I buy hard assets? How do I generate wealth? And I kept hearing the same questions. And I said, we need to write this in a book. And that's what I did. And it's not about my story. It's about how to build a hard asset empire. But I will give you the lessons, the hard lessons I've learned, so you can go up on the learning curve quicker and not have to have some of the pain and suffering I went through as a commercial real estate investor.
Yeah, I love that, right? I mean, that's what we're talking about, right? And that's the whole point of this podcast, is helping people along their journey. You've got a 32-year history of investing, and there's things that you learned the hard way early on in your career, things you're seeing now as an established developer and investor yourself. And it's something that provides a lot of value. So that hard assets book, we'll certainly make sure we link to that in the show notes there. I want to come back to a couple of things you said, though, right? You started talking about where you got started with Alliance, and part of that was that first deal was an industrial asset, had some investors involved, kind of transitioned more into medical office, and now you kind of expanded to more just commercial real estate. That is your expertise. You focus on commercial real estate, now looking to focus more on multifamily, and then you started to get into why there's going to be some great opportunities. And I want to come right back to that point, because that's where I think there's a lot of rich conversation to be had about where things sit and how people should be thinking about the market today. But then obviously your book and just laying out some of the things that you've learned throughout your career. Take us back to that first deal, right? So that listener today who was trying to get that first deal done, did you have partners? Did you raise capital? Like, what was your background? What gave you the confidence to know you could go out there and do it?
So I was a CPA. Okay. And I was fortunate enough to go to Indiana University, which was one of the top business schools in the country at the time. And I got a degree, and I remember my mom saying, get your CPA, get a job. I did it for a year. I hated it. I went through a tax season, and I had a billionaire inspire me when I was on audit, and it spurred me to get into my own business. So I started Alliance. When I did the first deal, I understood how to model numbers. And I did enough research of how should I package a deal. I looked at brokers offering memorandums, their shiny books, and I said, okay, if I could do something similar. I didn't have a format. I said, let's talk about the market. Let's talk about the tenants and the leases. Let's show them cash flow, and let's pay them a return and give them a huge equity split to put our investors first, which I've done throughout my career, is putting my investors first. So I end up going out and I paid an 8% preferred return, and it was an 80-20 split. Now in syndications, I'm 50-50. But at the time, I had to give away 80% to raise money. So the returns were great. It was a 2-tenant building. So I go and I raise, it was probably about 2.4 million in equity. That was a tremendous amount of money in the early 90s for a 23-year-old kid to be raising money. So for everyone out there, you can do it. Believe me, you can do it. There's a lot more opportunities to raise money. People are doing it through the internet. People are meeting people. People are advertising. There's a lot of different mechanisms to raise capital. But when I had to raise capital, I was scared shitless. Okay. I had to go out there. I threw on the blue conservative suit and the leather shoes. And what I realized in that deal was I had to ask for referrals. So I would go in and go to a coffee meeting or a lunch meeting or a dinner meeting with investors, and I would network. And I would network and constantly network and pick up the phone and call people and say, who do you know? And that was my way to raise money. I raised it in 30 days. But a lot of it for everyone out there listening was I wasn't going to take no for an answer. I wasn't going to take that I didn't have the ability to raise equity when I knew people have done it in the past. I went to my godfather, Bruno, who worked at a local bank, and I asked him for a loan. And he went to the loan committee and he went to bat for me. Now, you have to remember, I didn't have a balance sheet. I had no money. I don't know how I got this loan. I got the loan through a relationship. And I said to myself, I said, Bruno got me the loan. I need to go out and raise money. I am going to go and do this. And so $50,000, $100,000 checks, and I would just hammer away. And then I would get to $1.5 million. And I got to $2 million. I was rounding the corner. But the first deal, it wasn't easy. I had to go and ask for a credit for the roof and the parking lot. There was issues. I needed probably about $300,000 of credit, John. So I am going in Arlington Heights, Illinois, to the corporate headquarters of some of the largest home builders in the country, like Cambridge Home and Lennar. And these are the guys that started it. And so I'm sitting in front of two icons worth hundreds of millions of dollars as a young man. They're turning up the heat on me. They're offering me coffee in the fine china. And I'm sitting at the end of this big conference room and they're questioning me. And they said, so, and they looked how young I was. And they said, how are you going to buy this $95,000 square foot industrial building? I said, well, look, I got a majority of the equity raise. I'm going to be done soon. I got a loan. Here's the term sheet. And they said, well, why are you here? I said, I'm here to build a relationship because I've been through due diligence. We're about to waive our due diligence, and I have some challenges that I need credits for in order to close. And they looked at me and they said, man, you got a lot of nerve as a young man to come in our office and asking for credits. And I said, I have a challenge. I can't close without dealing with this because our lender knows about it too. We did a property condition assessment and I don't have a choice. I ended up walking out there with the credit. One of the guys, his name was Wayne, very big home builder. And hopefully he's living today. He's in Chicago, and he put his arm around me. He said, and they would call me kid. And he said, you know what, kid, you got a lot going for you. You got a lot of guts. You're going to be something special in this business. I can't wait to see how you perform. So 3 years later, we increased value. We made a 2-tenant building, a 3-tenant building, increased rents, longer term leases. And I sold that building for a 3x multiple. And that's what launched me. I remember I got a call from these guys that sold us the property, John. They said, how did you do it? And it took just persistence and resilience and doing leases and asking questions and putting the time in and developing that expertise and focusing and driving and all the things I talk about in the book. Okay. And it's real. It's real. So for everyone listening out there, I've been in your shoes. I've been that young man or woman. I've been the man or woman who was just getting started. It doesn't matter how old you are. Just get started. Pull the trigger. Find deals. Take a risk. Here's the thing that this is where you can't get your mind around. What's the worst thing that could happen? So you can't buy a deal. You fail. You get back up and you try it again. And you know what? Everyone in life has amnesia. Brokers, people in this business. I couldn't tell you deals I've done 20, 30 years ago. I'd have to look it up. No one knows. I bought a deal in Delray Beach recently. The brokers forget about it. My staff forgets about it. So for everyone out there listening, don't be afraid of what other people think. And I can guarantee you this, they won't even remember. Okay. So we use this fear and this worry about what other people think. And you know what? Everyone just cares about themselves. And the reason why I bring it up on this podcast is I know people out there need to hear this because people are fearful and people think like, what are people going to think about me if I don't go forward with this deal? What if I can't raise the equity? What if I can't procure a loan from a lender? What do I do? You know what? It's okay, everyone, to fail. If you're in this business long enough, I've been in for 32 years, you're going to fail. You're going to have relationships that don't work out. You're going to have third-party resources that you're not fond of, people you do love. You're going to learn a lot about life. But the key is hang in there and show up every day and work hard. And I can guarantee you, you will see success in this business.
Yeah, Ben, let me jump in. There are a couple of things that jump out to me, right? So first and foremost, when you're talking about your experience, that first deal, the big thing was really that resilience. You took the time, you figured it out, and you stayed with it. You had a mindset that you were going to be successful no matter what. And that is key, because if you go into it with that mindset, it makes it a lot easier because there's really no way out, right? You're not looking for the escape route. You're not looking for the exit. You're focused and locked in on, how do I do this? Who else do you know? Who else can I call? How else can, what relationships can I leverage? And you mentioned, Bruno, reaching out to Bruno and saying, hey, Bruno, I got this deal. And good doggone well, you didn't qualify.
No.
Bruno got that for you. So now you kind of had, this, not even incentive, but you almost had you had a reason that you had to deliver, because this man went out there and put his reputation on the line, put his name on the line for you. And you felt an obligation to live up to it. So you had to go out there and raise the capital. And even though it was your first time, even though you were 24 years old, you overcame a lot of the issues and challenges to get this deal done, including sitting with those more experienced investors and having to, not say confront them, but to sit with them and ask kind of a tough question in that situation, right? So I love the fact that you have that mindset. You talk about having that approach as investors, because we have to recognize that you have to set out to do something and give 100% effort to get it done. With all of that said, you are going to fail at some point. And to your point, I think a lot of times we think about what others will think of us, but really it's that internal voice, right? It's what you think of you.
Yeah.
And maybe you've got these limiting beliefs and you don't want to affirm them, because if you fail, it's that little voice telling you, I told you couldn't do this. Who in the world do you think you are out there trying to raise capital? Nobody wants to invest with you. What do you even know about real estate investing? Like, it's that voice in our own mind that gets the loudest, and you've got to be able to quiet that voice. And I think it's important to hear from guys like you and other investors to recognize everyone has this at some point. And when you're trying to do something big, you're trying to scale, you're trying to build a business, you're trying to create generational wealth, you have to lock in and focus on those things and not worry about all the what ifs. The what ifs could certainly happen. And I always tell people, I coach my kids in sports, and I tell them, you got two options when you go out there. You can win or you get feedback. We don't lose. Okay. If you don't get the results you want, why not? What happened? What should we do differently? What do we need to work on? Then let's go do and try again.
That's right.
So if you have that mentality, you're going to be successful, because you're just going to find ways that don't work. And ultimately you will find that way to be successful. Talk to me more about the way you approach mindset.
Mindset's everything to me. And what I do is I work on myself every day. I meditate. I take care of my mind. And I realize I need to be more awareness. And I got to seek the truth in what other people are saying. And by doing all this and increasing my awareness, it's allowed me just to understand the lens that someone's telling me through. Maybe it's a seller. Maybe it's a third-party resource. Maybe it's an employee or someone on my leadership team. By seeking the truth in what someone's telling me, I can understand their viewpoint. Now, I might look at something and it looks like the color blue, but it's green in the view of someone else. So people have different backgrounds, people have different experiences, and you have to understand that. And so when you're talking to a seller and you're looking to buy something, as an example for your audience, is understand, seek the truth. What lens are they looking at? You might not agree with their valuation, but understand why. How did they value it? Why are they selling? What's going on with them? And when you can seek the truth in what someone's saying, your whole world changes, relationships changes, deals changes. You're able to execute better. And that goes with everyone you deal with. And so mindset to me is everything. People ask me, like, if I can go back to my early 20s and know what I know now, what would I work on? I would do personal development. I would work on myself. I would be the best version of myself, how to be a better listener, how to love myself and appreciate the wins that I had, instead of just grinding like I've always done. And so I got into personal development about 12 years ago and doubled down on it. And it was the best decision I made. It totally changed my life, changed my career, changed the way I deal with employees and leadership team, and how we've scaled our business tremendously. And a lot of that has been from me, from working on myself, which is the best investment anyone can make. So for everyone listening out there, invest in yourself. Take a little bit of money, invest in yourself. Get coaches, get mentors, read books like Hard Assets and Hard Money like I produce. We have classes now that bring the book to life, which are incredible for people to learn how to build the hard asset empire. These are all the things I wish I would have known as a young man or woman out there. And so if you're listening, leverage into talent, leverage into smart money, leverage into knowledge, and don't go on such a steep learning curve like I did, but really leverage into people that have been there and done that will allow you to grow faster and also have more options and be able to pivot. Because sometimes you go through life, you might not like something that you're doing. You might say, hey, I'm not enjoying what I'm doing. So in order to find out what you want to do is you really got to work on yourself. So mindset to me is everything. It's the last chapter in my book. And there's a real intent why I did that. It's so important. And so I'm a huge proponent of it. I'm a huge proponent for everyone out there listening that you can do it. You can do whatever you want in life. And I ask this question to people, and you see it on social media. It's how bad you want it. How bad you want success. How bad you want that you want to become who you want to become in business and life. How bad you want it. Because guess what? You're going to have to sacrifice. You might have to go in on a Saturday into the office. You might have to work late hours. You might have to travel. You might have to miss a game of your kids. All these things I've done. And you have to ask yourself, how bad do I want it? Am I going to get in the deep water and swim? Or am I going to make excuses? And I say this a lot, and I don't mean this in jest or to offend anyone, is excuses are for weak people. Because excuses, you have to take a step back and say, instead of making an excuse, who can I tap into that can help me solve this challenge? Then I don't have to make an excuse. And that's why I always tell people, invest in yourself, find some mentors, find some coaches, find people that can help you to, whether it's personal development, becoming an expert in commercial real estate. I've had mentors in commercial real estate. They're icons in this business, some of the best in the world. And I've been able to pick their brain because I don't have all the answers. And one thing as a good founder and CEO of any company, for everyone out there listening, you don't need to know all the answers. You just have to hire amazing talent. And hiring amazing talent is the key. And by doing that, you'll be able to scale your business and accelerate it rapidly.
Ben, I love what you just said about really understanding who you are and knowing that you can do anything and don't use the excuses. And the way I like to spin that is instead of saying I can't, ask yourself, how can I? Because when you say I can't, you kind of stop the ideation process and you cut it off and you said I can't. So you stop thinking about it, right? Versus, well, how can I? If you say, oh, I can't because I don't have the money to buy this property. Well, how can I buy this property? How could I get the money to buy this property? Who can I talk to help me buy this property? Who has the money? Like now you start to ask questions that allow you to find the solution. So instead of just being definitive and saying you can't do something or something's impossible, ask yourself, how can you, or who can help you guide? And that will guide you down that process and open up the doors for you. The other thing you started talking about was, just having these mentors and folks that you rely on. We were talking about multifamily earlier. You're now kind of expanding into this multifamily space. And I'm very curious why you're now looking to get into multifamily. Given that you've got the background in industrial and medical office, I talk to investors all the time. As a matter of fact, Ash Patel and I did an episode a couple of weeks ago where we talked about, investing in commercial real estate with triple net lease options versus multifamily. And he was all about, living in the triple net space because in medical office, warehouses, strip centers, industrial, you don't have people living there. You're not dealing with tenants who, call this home. You're not dealing with landlord-tenant ordinances. You're not dealing with some of the same stuff that you are in multifamily. And a lot of those asset classes, in particular, warehouse and flex industrial, some of those areas, those are doing extremely well today. So why are you all now looking to get into multifamily after being so successful in these other asset classes?
Well, you're absolutely right. Industrial is doing very well, and we're doubling down on that. And the reason why we decided to get into multifamily is because we've been talking to a lot of our colleagues that have done short-term financing. The market has changed. We feel there's going to be some great buying opportunities in multifamily. And we've been circling that side of the industry for a long time. And I was in Japan about a year and a half, 2 years ago. And I said, now is time. There's trillions of dollars of debt that's going to be coming due in the next 24, 36 months. There's issues. People in 2020 were putting short-term debt on it, and they're going to have issues. Values have dropped. And it's the perfect time to enter that market and benefit our investors. And so we decide, hey, we're going to get into this space. We're going to double down. We're going to start acquiring larger apartment communities and get our feet in the water. And we think it's a perfect time to get into multifamily space. We think there's going to be good buying opportunities. We feel that lending will start loosening up even more and more. And it's a great time to diversify for our investors. But we're still one of the largest in medical office owning. We love industrial and retail. And those are the food groups we're never going to stop. But we saw a real opportunity in multifamily to get involved in the space and say, we're going to become a player in that space. And we're going to do it in a big way. And so I'm excited about it. We're a conservative type firm, the way we invest. But we feel there's a great opportunity for investors to make great cash flow and upside in multifamily over the next 5 years. And so we're going to capture that market.
So Ben, I think what you just said was really critical for our listeners to understand, because you are a guy who has over 30 years of investing experience in commercial real estate. You are recognizing the opportunity that lies within multifamily. Many of our listeners have been hearing the other side, the negative, being in investments where those investments are not panning out, distributions have paused, and there's a lot of fear being created. And I read a post yesterday from a really good friend of mine that talked about multifamily is dead and we need to be moving on to these different assets. And it's important for investors to be able to, sift through the noise. And the reality is every investment class has its peaks and valleys. And multifamily was certainly hot a few years ago, really over the last decade. And now we're starting to see that cool off, and that's turning some people away from the asset class. But the sharp, the savvy, the well-capitalized investors see what you see. There's trillions of dollars of debt coming due. There are going to be some great assets that are going to be available at very great investment prices. So savvy investors are now doubling down on multifamily. If you've already been in the space, it's also attracting new investors into the space. And more recently, we've seen that President Trump just made an executive order to open up 401ks to be allowed to invest in alternative assets. So there's potentially even more money that's going to come into the space as far as alternative assets are concerned. And I do believe that where you invest matters. Properties and overbuilt, oversupply markets may not have the same growth opportunities as markets where supply is still underdeveloped and there's undersupply. But on the same note, as a sector, I think there's probably way too much noise being made about multifamily in the current state based on maybe more emotions, right? Because maybe they took out the wrong loan product on projects and those deals aren't penciling out. And understand that happens, we get it, but everything is cyclical. And I think ultimately you're trying to identify opportunity. And that was something you said very early in our conversation, right? You are a commercial real estate expert. And what I read from you saying that was you identify opportunity. And sometimes there's going to be great opportunity in one sector. Sometimes it's going to be in a different area. Can you talk a little bit more about how you approach just your overall investing philosophy that, again, led you into multifamily now?
Well, people call me a futurist, and I can kind of see trends that are happening. I do a lot of reading, a lot of due diligence. I'm out there talking to people, looking at properties, doing all the things I need to do in tune market to determine, it was kind of like 23 years ago when we got into medical office. We realized we had a pivot. And so I'm always out there looking and thinking, okay, well, where's the value? Where can value be created? And that's how multifamily came into the space. When people are running from multifamily, that's when I want to jump in. I like going right into the fire, John. I'm not afraid to walk right in the fire. I've been doing it my whole career. And when it wasn't in vogue to buy industrial and office when I was in my early 20s and 30s, I was doing it and having success with it. And so, I'm a rebel. I don't just listen to everyone and what they do and follow the trends. I set my own trends because to me, that's how you differentiate yourself in commercial real estate. Is you got to kind of block out the noise and look at the facts and do your homework and look at absorption rates and what's going on. What's going on with the current administration? What are they promoting? What did the big, beautiful bill provide us? Which some great things that have been provided. So at the end of the day, I do a lot of research. I focus. I'm committed to the business. And that focus is what allows me to have these ideas and say, hey, let's start pursuing this or let's look into this. It's just something inside me that just knows. I've been doing this business a long time that I just know like, hey, here are the issues with this deal. Or, you get to a point in your career and you'll get there eventually is that you can look at a deal and you could smell it and say, nah, it's just not right. It's overpriced. It's not financeable. The credit of the tenants aren't good. We're going to have issues, a lot of default risk, et cetera. And that will carry over to multifamily. And so it's really, it's really doing your homework. It's talking to people. It's getting knee deep in the market. It's staying focused and persistent. All these things come back, and it all comes back to that mindset conversation we had. It will always come back to that is, do you believe in yourself? If you make a mistake, it's okay. Life will go on. And when I went back and I looked at that first deal, I said, well, what's the worst can happen? I'm going to go back to where I started, which wasn't from much. And I didn't have much. So I would do it again. I would try another deal and try to put it together. And so for everyone out there listening is that if you want to build a hard asset empire is you're going to have to put the work in. It's not for the faint of heart. And for everyone out there that's buying multifamily, it doesn't matter what size deal or how big or small. It's all about how bad you want it and how bad are you willing to work for it. And that's what's going to define at the end of the day that you don't have to make excuses.
Ben, I absolutely love it, right? We talking about working hard and finding that opportunity and recognizing that there's always going to be changes in the marketplace. As investors, your job is to find opportunities. And again, for so long, people really didn't think of it that way. They were just buying properties. But now you've got to go in and identify opportunities where others don't see it. And that's the game, right? Talk to us about your buy box. What does the deal look like in multifamily to you?
Well, we're looking for communities where it's usually about 150 units plus. We're looking in certain regions of the country, whether it's, tertiary markets, like it could be Columbus, Ohio, all the way to Asheville, North Carolina, different markets. We have someone that runs that division for me, who's an expert, who's been in the business for multiple decades. And we asked him and said, you developed the criteria from your experience. And he did. And he identified different cities, different types of units, core plus, what that meant, different types of yields. And so we're looking at value add and also where we can add value. We have no problem coming in and redoing construction and maintenance and all the things we need to do to add value and increase rents. So we're looking for properties where we can add value to the income stream. And then we'll hold it, John, typically for about 5 years and sell the assets. And so for us, that's what we're looking to do in multifamily.
Yeah, no, I love it, man. I think there's a lot of opportunity now, right? A lot of people brought projects with that business plan in mind. But again, interest rates shot up, maybe insurance costs, other issues came up, and they weren't able to execute. Talk to us about that challenge, right? Across your portfolio, you've got 30 years of experience. So the high interest rate certainly isn't the first time you've seen this environment, right? So talk to us about overcoming the executional challenges in your real estate portfolio.
Well, one thing I am is we're an expert in debt and how we structure debt. One of the lessons I teach in my book, Hard Assets and Hard Money for Hard Times, I talk about don't over leverage your properties, because when values change, like this audience has seen, and rates increase and the values are decreasing and you have to refinance, You're going to have to bring more cash to the table, whatever your issues are, and it becomes challenging. And so when you put low leverage on deals, so on industrial and office and medical office, specifically medical office, we go less than 65 LTV, closer to 50 on deals. And for everyone out there listening, I'm going to give you a real golden nugget right now. If you're raising money from investors, investors will understand that you're paying a lower yield and taking on less leverage to protect their principal balance, their capital contribution in your operating agreements. They get it. They understand it. So for example, let's just say you promise to pay them a 6, but you're paying them a 5% preferred return, cash on cash. It's okay. It's okay. 1, you want to protect yourself. 2, you want to protect the asset. And so I always get non-recourse financing from banks on all these deals for a lot of reasons. But then the day is don't over leverage your properties, and that will suit you well. So when you do have a rising interest rate market, you insulate and you protect yourself a lot better. And that's one of the secrets. And because we own a lot of medical office in our portfolio, well, the human body is never going out of style. So people continue to want to put money in medical office in our funds and our deals. And medical office is great because there's a very steep learning curve. It's a very complicated asset when you really get into it to create success. And we've been through it. And so it creates a large barrier to entry to invest in it. But at the end of the day, we have a very healthy portfolio, and a lot of it is understanding the concept, the ability to hold. Everyone thinks location is the key to real estate and commercial real estate. In commercial real estate, it's the ability to hold, it's the ability to hold, and the ability to hold. Do I have enough reserves? What do I deal with if I have a challenge, interest rates rise? How do I deal with challenges? All that is based on the ability to hold.
Ben, that's golden right there. The ability to hold, I always talk about making sure that you know the second day, right? So if you think about it, the value of real estate only matters on 2 days.
Mm-hmm.
First day is the day you buy it, and the second day is the day you sell it. And if you can control that second day, you're going to make money. It's when you can't control that second day when you're going to run into issues, right? For those investors now who are listening, they're going through executional issues today. They want to have the right mindset, but it's tough when they're staring at these issues and staring at some of the challenges that they face. What advice would you give them to navigate the current storms?
I would say hang in there. Don't let your fears control you. Create abundance in your life and keep growing, keep developing, keep learning. And I can assure you, tough times don't last. Tough people do. It's the way this business works. It's not for the faint of heart. Sometimes things don't go your way. You got to pick yourself up, dust yourself off, and keep moving forward. Keep pulling the trigger and keep pushing forward. Show up to work every day. As painful as that might be at times, just show up. Show up and do your work and grind and put your head down and keep focused. And I can assure you, everyone out there, you will create success, and you will do a lot more. You'll do a lot more great deals than deals that don't work out, and you'll see. And you know what? Look, in your career, everyone out there, you go 7 or 8 for 10. That's a heck of an average of success. I know investors think you should walk on water and go 10 for 10 like they think we do, but you can bat 700, 800 and make money and develop a life and build a family. That's a hell of a career. And you should be proud of yourself, for everyone out there. And let me tell you something, if you're listening, is the fact that you've taken the chance, you've taken the step forward to buy a deal, to own a piece of real estate, to manage it, whatever you're doing, to lease it. That's a big deal. Most people don't want to do that. Most people don't have the guts to do it. So I commend everyone out there listening that's investing in real estate, especially commercial real estate. So keep pushing forward and you'll see great success.
Ben, you've built a robust portfolio. Talk to us about your management structure. Do you have in-house property management? Do you have third-party vendors that you work with? Tell us about kind of just how your team is structured.
It's a great question, because when I started, we were doing third-party management. We were shepherding it out to other companies. And I had a joint venture with a company in downtown Chicago that would manage it. And it got to a point where we're growing. And I said, we really need to control this in-house. There's too many gaps when we have a third party managing it. And so once we started managing our own portfolio, it was great. More control, better deal with issues, more rapid communication, more loyalty. And so we made a decision years ago to manage internally our own portfolio, and it was the best thing that we decided to do.
Yeah, and I think it just goes to it, right? Like when you scale up, you're playing a different game, right? Step one is, hey, let's make this thing work. Let's buy the property. Let's make money for investors. As you start growing and scaling, now you're driving more of efficiency, right? You're trying to optimize the operations and you're trying to make sure that you can make more money.
Mm-hmm.
And that is the true, not just investing, but business, right? I mean, if you go to any major business, any major corporation, they're always looking at the business and figuring out where they can be more efficient. How can they squeeze out a little bit more profit? How can they, pay their people better and make sure that they have the right folks doing the right jobs. And that's one of the things that we have to do, not just as entrepreneurs and investors, but as business owners and folks who are looking to grow and scale. And it goes back to your earlier point, right, about investing in yourself with education and mindset. It's really being able to step back and approach the business with a clear mind to identify, how do you make this better? How do you make more money, not just for yourself, but for your partners, for your clients, for your investors, for your employees? Because when you do good, that benefits everyone. So it allows you to really come to the table with a clear mindset and be the leader that the team and the organization needs. Hey, for those folks who are looking to scale, they have a portfolio now, they want to take it to the next level. What's one last piece of advice you would give them?
Well, one piece of advice I would tell them is hire amazing talent. You don't need to know all the answers. Just hire amazing talent and leverage into other people's knowledge. Additionally, get help. Get a mentor, get coaching, read my book, Hard Assets and Hard Money for Hard Time. Take courses. Keep developing yourself. Keep learning and growing and improving. And those will help you scale and work on yourself. Work on yourself.
I love it. Hey, Ben, thank you for that great information. I really appreciate your time today. Hey, listeners, if you want to learn a little bit more, check out Ben's book. He just talked about it as well. And make sure you come and join us out in February for the Best Ever Conference. That's right. We're going to be out there in Salt Lake City. Looking forward to connecting with you in person. So be sure to check us out and get your ticket there. Until next time, check us out here on Multifamily Mastery. Make sure you like, rate, and subscribe to this show. And we'll see you next week. Take care.